More income. You want it, I want it, we all want it, and I would imagine that we all want it on a monthly basis. So let's scratch that itch together and run through 3 monthly paying dividend stocks to buy right now before our interest rate environment actually changes and we miss out on some serious opportunities to start gaining monthly dividend income. Ready? Now, investors, before I go ahead and run through these 3 dividend stock picks, I just want you to know that despite all of the fear out there, opportunities are in fact all around us. And a matter of fact, it is precisely during these stretches of time when our economic environment is not as, say, comfortable with higher inflation, devaluing our hard-earned dollars, and elevated interest rates that are in fact damaging all businesses across all sectors, that we really need to just be extremely proactive in doubling down on very specific investments. And right now, there are in fact 3 stocks that have not only been battered down, but over the last few days just remain in the muck of the red. But in simply buying them now and waiting out for the longer term, the interest rate environment will turn around with interest rate cuts in due time, and these stocks are set to soar. So without further ado, let's kick off with the one, the only Realty Income, ticker symbol O, which I would imagine most of you already are probably well aware of. After all, it's literally dubbed the monthly paying dividend company and among the safest of safest monthly paying dividend stocks with a great moat around it. Now, when it comes to that moat, we're talking about a real estate empire that has over 15,000 properties within its portfolio that span well beyond the borders of the United States. Now, we're also talking about a company here that just continues to impress us with a very high occupancy rating, usually above 98%, and with thousands of clients diversified across industries to ensure the magic of a powerful monthly dividend company. But in this environment right now, it is hard to fall in love with such a stock as it continues to wane in the red here, trading for just $52 per share, which is down by about 7% year to date. But I want you to actually zoom out here to its 3-year window with me. And if we hover over the time periods where interest rates were actually much lower, we could see that the stock was trading well into and well above the $60 per share mark. So what gives? Well, as I stated, interest rates actually starve companies from growth as lending becomes more restrictive. Of course, in the real estate business, we all know that debt is just very necessary. But let's now click over to see the span of 10 years time, and we're going to see over 93% worth of share price appreciation, meaning the company grew like crazy. And it's likely going to continue to expand well after these contingent times come to an end, which is why analysts remain bullish on the stock, forecasting the share price to hit $60 per share, which is almost 15% worth of upside from here. Now, it is most recognizable here to see increased hedge fund activity with Realty Income, with almost 1 million shares scooped up by hedge funds last quarter. Now, this is all while the Realty Income team is actually revving up their share buyback program, as we can see they did so back in March. However, we are here for that monthly dividend, to which we can reap the benefit of their dividend, as we see that we'd be collecting on a fat dividend yield here, coming in at 6.04%. That has been growing pretty steadily here by roughly 5% year over year, and on a reliable track record of over 55 years and counting worth of the dividend streak. Now, on the other hand, if growth is really important to you and you're really looking to grow with a company, well, I want to go ahead and pitch to you Agree Realty, ticker symbol ADC, which very well may be the ideal investment for you in your portfolio. Now, it's very similar to Realty Income when it comes down to their net leases, their approach in targeting retail properties with very similar clientele to actually lease those properties out to, but yet a much smaller portfolio here, meaning they're going to experience much more growth over, say, the next 5 to 10 years, most likely. Now, the portfolio as we speak totals out to about 2,100 properties or so. And again, right now, it's actually down underneath $60 per share, just like Realty Income. Yet click over to 3 years here. We're going to see much greener days before it tumbled down to the red. But check this out. Over the last decade, Agree experienced over 200% worth of share price appreciation. And while we have seen some hedge fund activity rather recently, the trigger here for all of us should be the insider activity that's been going on at Agree, with executive after executive pulling that trigger. Now, that leaves for plenty of upside predicted by analysts as well. 10% expected, coming up to $65.50 per share, all while yet another share buyback program is going on if we kick it back to March here to see an increase in share value through those buybacks. Now, dividend wise, we were talking about a 5.06% dividend yield with a 12-year dividend streak thus far. Now, if real estate just isn't your type of gamble, I have one more monthly paying dividend stock opportunity for you. But before I actually cover it, investors, come join me on this financial freedom journey by simply subscribing to the channel with all the stock ideas and market insights coming your way. And while you're at it, go ahead and tap on that thumbs up button for me. That will just let me know to keep creating content like this because you're getting value from it. With that, let's go ahead and talk Main Street Capital, ticker symbol MAIN, which is a business development company that is focused on providing customized debt and equity financing solutions to lower and middle market companies. Therefore, I'm talking about all the companies that would actually have quite a hard time during the times we're living in right now with our current economic environment. They all basically need funding. So go figure. It is actually up this year, trading for $48 per share, up over 16% year to date here. Though from its peak, we can actually see it is down from weeks ago. And if we click into the decade's time here, we can go ahead and see 240% worth of share price appreciation. It's a true powerhouse thanks to the name of the game when it comes to financing companies during their harder economic times. Yes, a riskier play, but risk always pays off. Now, we can also just continue to see bullishness from analysts coming up to $51 per share as long as we remain the status quo in this environment. And to that I say cheers, because as a long-term dividend investor here looking for monthly income, here we have it with a 6.06% dividend yield that's grown by 4% year over year and has been maintaining a dividend track record now for over 16 years. Now, investors, there you have them, all three monthly paying dividend stocks. I'd love to know which ones you own, which ones you're thinking about buying or straying away from, or what exactly your game plan is. Let me know down in the comments below. Be sure to go ahead and join me here on this channel by subscribing, and don't wait to go ahead and check out more insights right here.